Hi, everyone. I'm Alicia Greenberg, VP of Membership and Programs at the Advertising Club of New York. Thanks for joining us in the virtual clubhouse today. We have over 300 of you registered. Thanks for being here. The virtual clubhouse is where we gather the advertising, marketing, and media community. And we hope that if you're not members of the club, that you can join us. You can visit us at theadvertisingclub.org. Again, we thank you for being here for this session, which is part of the Vertical series, where we take a deep dive into the challenges and opportunities that brands face today. Again, we gather people in the clubhouse because we deliver content and programming to help celebrate, educate, and empower our members. If you're going to share content from today's session, we're at AdClubNY, hashtag the verticals. So please spread the word, and this content will be available on the Ad Club website after if you want to share with others. Before we get started, I just want to thank the Ad Club team, my partner Meredith Lipson, for helping pull this together, Charity Renfrew at Ogury, and the team at Ogury for joining with us on this programming. They provide amazing insights, and we've worked together on several of these programs. So Ogury will be delivering the content for today, the insights that we'll be covering. And again, we'll share those afterwards. But with that, I want to hand it off to Evan Rutchik, CRO of Ogury. Hope you enjoy.
Okay, Alicia, thank you so much, and thank you everyone on the call here for taking the time to join us today, and thank you again for Ad Club for having me again and putting this on. Today I'm going to be discussing mobile user behavior trends within the broader finance vertical. But before I jump into the content specifically, I just want to give a quick overview of who Ogury is for those who might be unfamiliar with us. Founded in 2014, Ogury is the creator of the first advertising engine driven entirely by user choice. And Ogury allows our users to actually choose how and what data they share with us and our publishers. And then ultimately, those users get to choose their own ad experience based on those preferences. It's fueled by unique, reliable mobile user and behavior data from over 400 million consented user profiles globally. And this choice drives more value for the users, their experience, for the publishers, and of course for the advertisers. And all of this is powered by our purpose-built algorithms and our innovative ad formats. Of course, I'm more than happy to share more about Ogury at a later time for anybody who might be interested. But for now, we can get into the agenda. So today, I'm going to kick it off again by discussing the finance landscape, some insights. I'll share some financial persona-based trends and predictions that we at Ogury have seen or are predicting. And following the presentation, there will be a virtual chat with Josephine Chu from Wells Fargo, Tori Marlin from JP Morgan Chase, and Christina Smedley from Robinhood. And I'm incredibly excited for this panel to come in just a few minutes. All right, first we'll kick it off with a broad look at the landscape. And we'll start here with consumer spend. So consumer spend has changed pretty drastically this year, with a recent survey actually revealing that 64% of Americans' spending habits have changed since the start of the pandemic. Might not be too much of a surprise, but what exactly do these changes look like, right? And research from Parks Associate revealed that there's been a 50% decrease in discretionary spend. And despite this decrease in the discretionary category, consumers are still spending. And no surprise here, they're turning to online. And in fact, a study by IBM's US Retail Index actually revealed that e-commerce is expected to grow by 20% in 2020. And in addition to this growth, the same study actually shared that the pandemic has accelerated the shift away from physical stores to digital shopping by roughly 5 years. So what are people actually doing with their money now, right? There have been various categories which saw an uptick in purchases over the recent months. If you joined Ogury's last couple of Ad Club events, you will have seen that consumer spend spikes across the online grocery and across consumer electronics verticals have grown. There's also been quite a significant year-on-year spend increase across pet care, home improvement, and a focus on health and fitness. But of course, we want to understand, like, what about the shifts within the finance vertical specifically? So a survey by Mint actually shared how year-over-year spending habits have shifted. And interestingly here, the consumer spend has shifted on investments has increased by a massive 42%, pretty big number. Not only are Americans actually spending their money on investments, but some people are also actually deciding to save more, with about half of Americans saying they've either saved more or they've paid down debt since the outbreak actually began. And we'll definitely dive more into this with our panelists in that discussion, as I'm sure they have very unique perspectives on it as well as it relates to their business. But going further here, while that was a brief overview of consumer spend, now we can look at how the ad market changed and the ad spend. And eMarketer predicts that despite this year's decline in total ad spend in the US, the financial service category itself will actually increase its digital ad buying. In fact, it expects digital ad spending in the US to increase by 9.7% in 2020 to reach $19.62 billion. So the financial services industry will become the second largest spender on digital advertising, with advertisers actually relying very heavily on mobile. The mobile ad spend will grow 13% to almost $14 billion in 2020, accounting for almost 71% of all the digital ad spending in financial services, which is absolutely huge. And there's no surprise why, right? People are turning to their mobile phones to manage their finances more and more. Apps Flyer research actually revealed that there's been a 90% increase in finance app downloads. And the Harris poll suggests that 73% of US adults said they were more likely to use digital banking and digital payments following the coronavirus pandemic. So clearly the behavior has shifted. So in summary, though, the landscape overview here, spending habits have changed as more Americans are prioritizing their finances, with many moving money away from discretionary purchases to investments and savings. And secondly, consumers are turning to their mobile devices to manage their finances, whether that be through online banking or other financial apps and sites, which I'll now dig into in this next section. All right, so in this next group, in the next section I mentioned, I'm going to share some insights on financial persona trends and some predictions that we have. Just to give you some context, and before I go into the information, where does this data actually come from? So I'll give you an overview of our Active Insights platform and our advanced custom persona study. So Ogury, as I mentioned, collects Ogury provides users choices in how they interact with us and our publishers. And in that choice, we're able to then, if they agree to, of course, collect traceable and trusted user consent through our consent and preference management platform. Once given that consent, we then start to gather consented signals from multiple sources. Purpose-built algorithms transform these consented signals into a unique and reliable understanding of the mobile user and their journey. This then provides us with a view of installed apps, usage of apps, websites browsed, and the demographics of these users. The Insights tool then visualizes these insights that can become, for advertisers, directly actionable. And our Ogury's advanced custom persona, just where the data ultimately lends itself, as a study within the Active Insights platform that uncovers the demographic breakdown of specific audiences, plus interests and discriminant behaviors. And that's actually what I'll be sharing with you right now. All right, we know that there has been an increased adoption of online banking, during this pandemic. So I pulled a study to look at the online banker persona to better understand this audience group. And here you can see the takeaways of the persona study, right? In terms of demographics, they're very evenly split between the genders, skewing only slightly more female, with the age breakdown also quite evenly spread across the age brackets. Looking at their interests, which is based on app ownership, these users are almost 3 times more likely than the general population to own the Redfin real estate search for home sale app, and they're 2.9 times more likely to own the buy now, pay later app Affirm. Right? They also have smart homes. 18.5% of these users own the Google Home app, and 13% own the Amazon Alexa app. They're mobile first when it comes to their health. They're over 2 times more likely, actually, than the general population to own the Teladoc app. And when we look a little bit deeper into the usage, you can see the discriminant brands showcase the user's affinity to specific brands here. And what we discovered is that they show a high affinity to the wealth management app, My Merrill, and the savings app, First Savings Credit Card, the loan management site, Avant, and various retailers, including Sorel and Mountain Hardware. You can see a difference there. And then after looking through all of the data, it was pretty clear to me which sub-personas had emerged from within the online banking persona. And these three are the investor, the budgeter, and the saver. And so I pulled in additional persona studies for each of these groups to really better understand their nuances. And here you can see their demographics. Right? In terms of gender, the investor skews more heavily male at 62%. The budgeter and the saver are more evenly split, with the saver only slightly skewing more female. Regarding age, a large portion of the investor group is between 25 to 34, followed by 35 to 44. And those two age brackets are also the highest for the budgeter, with the large majority between 25 to 34. When it comes to the saver, they lean a little older, with the 55 plus age group having the most users. Diving a bit deeper into their interests of each of these categories, the top interest category of the investor is real estate, with this group over 4 times more likely than the general population to own the Redfin real estate app again. They also use their mobile device to manage their investments. In fact, 41% of these users own the Robinhood app, and they're active on their phones for work. Right? These users are almost 4 times more likely than the general population to own the Slack app. And now looking at the budgeter, these users are also interested in real estate, with 24% of the group owning the Zillow app, which is 4 times greater than the general population. And despite being on a budget, they do like to dine out. These users are nearly 9 times more likely than the general population to own the Open Table app, and they like to split the check. They're over 18 times more likely than the general population to own the Splitwise app. And last but not least here, the saver, the third category. These users are 8.3 times more likely than the general population to own the Amex application. They like to shop on eBay, with 37% of these users owning the eBay app, and they like to buy now and pay later. Right? They are nearly 5 times more likely than the general population to own the Affirm app, which does that functionality. There's really a lot more I can share from these studies, particularly when it comes to how each of their interests change based on demographics. But for now, I'm going to illustrate how you can activate on this information today. So here's an example of how to potentially target the 3 sub-personas that I had highlighted. Right? You should combine not only demographic inputs, but also incorporate custom app and site targeting matrices, such as what you see here, what you're seeing here actually. And as you know, the interests and behaviors of the personas, you can get extremely granular with your targeting setup. And this ensures that you're sharing the right message with the right user, as they each have a different need, therefore must be communicated with relatively differently. So before ending this presentation, I just want to summarize a couple of our findings real quickly with some of our 2021 predictions. And firstly, we saw that users that engage with various finance apps also engage with real estate and home-related apps and sites. Right? Knowing this and other trends, such as the increase in savings, we can predict that mortgage refinancing will continue to increase well into 2021, and there will be an increase in loan requests in the new year as well. Music to some of our panelists' ears potentially. Another finding is that more people are choosing to use the buy now, pay later services. And so seeing this pretty steady incline, we can predict that more retailers will introduce a pay later option, which will result in an increase in consumer spend leading up to the holidays and into the new year. So everyone loves more credit. Of course, knowing these emerging trends, I wanted to better understand the demographics and interests and behaviors of the real estate and the buy now, pay later apps and site users. So I did pull some additional studies that we have. I'm really excited to chat with Tori, Christina, and Josephine. So I won't go into those findings now, but if you are interested in these insights or anything else for that matter as a follow-up, please feel free to email me at evan@ogury.co. And there it is for you right there on the screen, if interested. So now I will unshare my screen, and I will welcome my panelists to turn on their cameras, and we can dive into this. Okay. Amazing. Everyone here, great. So thanks a lot for joining us today. Let's kick this chat off by each of you introducing yourselves and your roles. Also, the world is curious. Let us know, maybe I'm just curious, let me know what the most unexpected thing is that you spent money on during the lockdown. And I'll go first. Okay, I'll go first just to give you some time to think about this. So I'm Evan, as you just heard me speaking for 10 minutes or so, CRO for Ogury here in the U.S. And the most unexpected thing that I spent my money on during the lockdown is, I've talked about this before, so it's not super interesting for those that have heard it, but this water bottle that tells me when I'm thirsty. I don't know how it knows. I don't know how it knows, but it reminds me, and it just continues to keep me drinking my water and keep me hydrated. So, all right, Tori, you're up.
I love it. I have one here with the times on it.
There you go.
Someone was like, that's a bossy water bottle. I'm like, it's true. Hi, everybody. I'm Tori Marlin. I lead brand and advertising for corporate responsibility at JP Morgan Chase. I've been at the firm a little over 2 years. Before that, I was at Pop Sugar. And before that, I was on the founding team of Built by Girls out of Verizon Digital Media, helping young women get into tech careers. And so the first thing that came to my mind was a puzzle, like a really expensive puzzle. I just don't think I ever expected to like see a price gouge jigsaw puzzle, but there was a puzzle shortage. But also my husband and I just adopted a puppy, a little 1-year-old Boston Terrier mix. So when you said the pet care category spiked, that I thought of that as well.
Amazing. Josephine.
Hi, thank you. My name is Josephine Chu. I lead up the integrated marketing. We've moved a little bit, sorry guys, of public affairs. So that would include brand sponsorships, corporate social responsibility, and corp comm. So I'm supporting that group now. It's a bit new for us, as you guys might have heard that we have had a big reorg. Recently. Okay, so probably the biggest surprise for me is how little I shop on Amazon since the start of the pandemic. You would think it's the opposite, but I've spent much less, and I've spent a lot more time trying to support local businesses. And but what I realized is I need to be very patient, because sometimes it's not there. It's going to take me a week to get it, but I'm not doing anything, so it's fine. Staying at home.
Excellent. Christina.
Hey everyone, I'm Christina Smedley. I look after marketing and brand and content and communications at Robinhood. I'm in a car because 2020 seemed to be the only place I could do this today. It's actually just like everyone else. We bought a puppy and have had it all the way through COVID. But the thing that I spent a lot of money on, which I was surprised about, was both Scotch and soda streams. I bought soda streams and use them all the time now, which is something very different for me.
I love it. I love it. All right, awesome. Thank you so much for that. And let's jump straight into discussing some of the challenges that we all may be having. We know that spending habits have changed since the start of the pandemic, which has been both good and bad, of course, for certain industries. What challenges has this presented specifically to your business? Josephine, if we can start with you, that would be great.
Thanks, Evan. I think one of the biggest challenges as a bank, which you don't realize, but you realize later on, you realize that it's actually an essential business. I don't think about it that way, but it is so evident. Probably some of the biggest challenges besides sort of spending habits is really taking care of our employees, as well as taking care of the people, the public. So the challenges became like, hey, do we ask the banker to go to work, or do we have people lining outside the bank in their checks? Do we spray down every single counter? So those are some of probably the biggest challenges we had as a company. And of course, as a company, we ended up having to, I'm sure like everybody else, to buy a lot of equipment to allow for things like this for Zoom. For the longest time, we couldn't go on Zoom. But I think probably one of the biggest and most interesting marketing things we did was how many people wanted to call our online, just calling in the usual channels, calling in, trying to come to the bank, and us trying to onboard them to mobile app so that they can do purchases, they can do a lot of things. Just telling them that, what, the things are there, you just have to use it, and here's how you can use it. Good thing we have a pretty good mobile app. And so we were kind of primed for it. And they can also do a lot of things online as well, but definitely a lot of big push. We even had to put a whole campaign out just to tell people that, hey, this is how you can do things. And so that got us some really positive feedback that we were caring about them. Of course, that was after the beginning part where I think all the banks got hit really badly. Like we didn't care about them, but then we actually do, but it's just moving everybody online. So that was the way that we had to manage it.
Interesting. And then and Tori, maybe a similar or different experience for Chase?
Yeah, I think you know, it's such a challenging time for everybody, right? Our customers, our communities. So I think there were, anytime the consumer need changes, the marketing has to change, and it felt like this one happened overnight. And so, you know, there were a ton of business changes across the firm. Similarly, thinking about how do we provide relief for our customers and move our products and services to mobile. We saw things like category shifts for our card spending rewards, right? So where travel and dining had been the whole thing, all of a sudden nobody's traveling and dining looks totally different. So there were really quick pivots there. And then, yeah, I think from a marketing perspective, having to pivot creatively, you know, we had campaigns that were in the works. Some were, you know, basically in production. We had flights booked to cool places, right? To do these really excellent campaigns, and we had to sort of pause, reassess, cancel things. And I think reacting in real time to cultural shifts. One of the first ones for us was graduation, right? Understanding all of a sudden that graduation was a really big moment for students, and that sort of went away for them. So I can talk more about it as we go, but I think just really figuring out when and where do we show up and what's the right way to do that safely and to be there for our customers and our communities, but also not sound braggy and remain authentic.
Excellent. And Christina, same question for you.
I think we came at this a little bit differently than many other organizations because people were at home, I think, sitting and thinking about their futures and what that meant for them. And we saw, I think we've announced publicly 3 million incremental accounts in the first 4 months of the year. We saw people begin to invest. And some of these people were investing for the first time. I think we're really proud at Robinhood that we've brought in people from multiple different socioeconomic backgrounds, different diverse communities. But with that came a real need for us to deliver education. And so that's what we've sort of moved our marketing activities towards, so that we can actually help people, many of whom are first-time investors, find their way through something that has traditionally been rather exclusive for them.
Mm-hmm. Awesome. All right, this question is going to be for you first, Christina. So listen carefully. With consumers reassessing their personal finances in light of the pandemic, right? We all took a hard look at what we were spending money on, I'm sure. It has affected nearly every facet of the finance industry, from mortgage refinancing and credit loans to delayed tax filings and stock market investments. All right, so you mentioned a little bit for yourself, for Robinhood, but what opportunities have you seen arise specifically from these shifts in the change of behavior?
I think it's a broadening of how people think about their futures and how they think about investment. And when we listen to consumers, Robinhood was built very much mobile first and very centered around ease for customers and actually making their first trade. And I'm pretty new in the role, so I've been doing a lot of time listening and speaking to customers, and they all talk about the fact that for the first time, they felt very empowered to do something for themselves. And I do think that's a bit of a reflection on everybody sitting at home and thinking, what does the future look like? I really do believe that. I also think that our sort of median age of investor is 31, and I think sometimes people are really surprised about that because they think it's a lot younger, but actually it isn't. And these are people who are really beginning to think about what's important to them as they plan forward.
That's great. Josephine, how about you? What opportunities have you seen arise from these shifts in behavior?
I definitely think it's, again, that kind of the mobile space, but I'm fascinated by Christina's responses, partially due to my background, having been at Schwab and an investment firm. So it's such a fascinating time to be able to get people who have some time to sit at home and go, you know what, instead of just working, you now have a little bit of time to take a look at your finances, right? And then you maybe don't spend that much going out or buying clothes or traveling. Maybe you have a little bit of money, maybe we can learn how to invest. And I think I'm kind of envious of Christina because If I was back at Schwab, obviously Chuck Schwab was one of the first people to bring investment to the general public to make it, available for the small guy. And I think I'm much more fascinated by Christina's work now than I am.
If I can just jump on, one thing I
Yeah.
would say that's been really interesting to me is that it's that discretionary income, that extra cup of coffee or that pair of shoes, if you're me, perhaps, that you would buy. We see people putting that into the market, and with recurring investments where you can just put a little bit in every week or every paycheck, we've seen people really adopt those new habits. So recurring investments, fractional shares where you can buy a little bit of a brand that you really care about with a small amount. Those are things that people have really embraced during this time.
Amazing.
Yeah, that
Love
really
it.
is great. And I'm one of those 3 million, by the way, that joined. So
Thank you. We're very grateful.
Yep. Tori, same question for you. What opportunities have you seen arise from these shifts?
Yeah, I think similarly, we are seeing people really think about the heart of what matters to them. I think it was a time for everybody to kind of take stock and say, what is most important to me and what matters in the world. And I think for me, I moved to our CR team from small business in March. So it was a heck of a time to be working in corporate responsibility, but I think such an incredible opportunity to put our CR and D&I work front and center. It's always been core to the firm and really, I think, super important internally, and we have messaged externally, but I think it really kind of put us into the spotlight and in all the work that our excellent CR and D&I teams are doing. And consumers started to ask, what are you doing? We saw insights that consumers really wanted to only work with brands that were supporting not only their communities and their customers, but their employees, right? People were saying, I'm not going to work with you or buy from you unless you have paid sick leave for your employees, right? So I think we saw this huge shift, and it was always kind of important, especially among the younger generation, but I think we saw this big shift in folks really caring about what we're doing. And so it gave us an opportunity to apply some of the best practices we have from a consumer standpoint for external messaging to our D&I work. And then I think there was a big creative opportunity. I think that, it's funny, I worked on pharma a lot before coming to finance, and folks are like, oh, that sounds kind of, challenging, right? It's so much legal, but I think it really actually similarly gives you an opportunity to be extra creative because you have very specific walls to work within. So, we saw some big success, I think, when we were authentic to ourselves with the cultural shift, but I mentioned graduation before. We decided pretty last minute. It was a Herculean effort on our team to host a virtual graduation. We hosted two. One was sort of national for all age groups. It was called Show Me Your Walk. So anybody graduating truly from like preschool all the way through grad school and doctorates. And it was just this wonderful virtual celebration of graduation. And we talked about financial health and why that matters. And then we did one with our Advancing Black Pathways team specifically for HBCU grads, which was just an incredible experience. And we never would have thought of that, right? If we weren't forced to say, okay, what's happening in the culture and how can we be there in a way that our consumers and our communities really need. And we saw great metrics. I mean, we had Super Bowl scale from that without purchasing a TV ad. And so I think it's a win-win when we get to say things like that. And we also feel like it was a really great moment where we were serving a consumer need and we were lifting people up in a way that was, we weren't finding elsewhere.
Mm-hmm. Mm-hmm. That's really great. Let's actually go into the D&I thing a little bit. And so since the pandemic, like you just mentioned, there's been a really positive shift and an increased focus on CSR and D&I initiatives across a lot of companies. I'll start with Josephine quickly. Just if you could share what Wells Fargo is doing regarding CSR and D&I, and then Tori, I'd love to hear your thoughts about the $30 billion commitment to advance racial equality and equity. So if you two could talk about those things, that'd be fantastic.
Yeah, thanks, Evan. The story at Wells Fargo on what I consider CSR, what I used to call CSR is now more sustainability and social impact. It's fascinating because we've been supporting things like United Way, a community chest was what they used to call them since late 1800s. I mean, that, think about that for a moment, right? We've been doing good as a company for over 100 years, and we've been supporting, Red Cross since 1910, and so on and so forth. And what is interesting is when we used to support this, we don't talk about it. The reason we don't talk about it is because it felt chest beaty at that time. So every year, at last few years, we've been donating over $400 million a year. If you think about it, that's $1 million. That's more than $1 million a day. So every single day, Wells Fargo is putting money into the community. But again, it's a chest beaty thing. And as Tori said, times have changed. People are expecting people to be doing good. Unfortunately for Wells Fargo, we haven't been talking about it due to the problems we've been having the last few years. It's been really hard to kind of come out and go, hey, look at all the stuff we're doing. But you are seeing some of those. So some of the things that we have been doing is really to figure out what exactly people need right now. You see those long lines of cars. I mean, I don't even care what race, what creed, whatever you are, people are suffering out there. And you see these long lines of cars of people trying to get food. And you see people who have never been homeless and not in the homeless population, about on the verge of being pushed out of their homes very soon. But also people don't even know where to find food banks. They don't realize that, when people calling food bank going, I get this food for free. So what we did this summer was we used to do a holiday campaign, but in the summer we realized that the situation was so dire that we decided to open up all of our branches, our parking lots, and we reached out to Feeding America. They're like, oh my God, I don't see how we can do that, but we did it. So we ran about 200 events on all of our about 35 cities over the summer to try to just get people driving up, and we put food in the back, and we partner, with the food banks across the country. But we really tried to rethink how we could possibly help. Instead of collecting food, we're now like giving food, right? So I really think that I'm very passionate about this. I can talk about this until you guys shut me down. But but the point is, we are doing it. Let me I'll finish up a couple and I'll pass on. Another initiative that we're doing, you won't see it marketing yet, is really trying to close the gap. We realize that there's nobody out there who's helping, with people helping the homeless, and then but with nobody out there trying to take care of the people who are about to become homeless. They've never been homeless before, so we're starting to put funds and initiatives around that as well. So, okay, I'll shut up now.
That's great. It's great. Appreciate it. And Tori, as I mentioned, Chase announced a pretty massive commitment to advance racial equity and equality. Would you go into more detail about that?
Yeah, absolutely. And Josephine, I could talk about this for hours too. So we'll find time. I love that. That's really incredible work. And I think it's similar, right? And especially being in a brand role for CR, I'm always like, we're doing so much. How do we, we want to tell everybody and sort of shout it from the rooftops, but it is certainly, you don't want to sound chest beaty, and we want to be authentic. And I think part of what has been really fun for me is leaning into the partners that we already have in the community and really using our platform to tell their stories. And, so this $30 billion commitment we recently announced for across JP Morgan Chase. It's obviously a huge number, and it really builds on our existing commitments, really looking at who are we working with already in our communities, and especially in Black and Latinx communities, and how can we drive an inclusive recovery. I think we saw how much COVID has exacerbated already existing kind of structural barriers that have really contributed to the racial wealth gap. And what I find so exciting about this commitment is it is not just a philanthropy commitment. It really actually is primarily not. We do have a large number of philanthropy commitments there, but the focus here was for the firm to get large group of stakeholders together and say, how can we make structural changes internally and externally across our businesses, right? So really leaning into expertise we have as a business in policy. We have a policy center, and how do we leverage their expertise? And then of course our philanthropy partners to really make these structural changes. So the commitment extends across 4 different pillars over 5 years. So it's expanding affordable housing and homeownership. leadership. It is growing minority-owned businesses, particularly Black and Latinx businesses, improving financial health and access to banking. So we're looking at the underbanked population and how we can grow access there. And then, internally and through our partners and suppliers, how can we increase, and expand a diverse and inclusive workforce? So, I think probably don't have to tell anyone here, there is so much work to be done, and we come at this very sort of humbly and excited to take a step forward. And I think this is a big step in that direction, and we're holding ourselves really accountable at the highest levels, and we'll continue to kind of report out. But, I think this is exciting for us as a firm. It's really exciting for me as a person working on this. But I think you hear what you're doing at Wells, and so many of the financial institutions that, are in our category are doing this work. And I think we're starting to see some big changes.
That's great. And it really is great stuff, everybody. And when I think about, Christina, when I think about what Robinhood is doing, just in terms of creating like an extra level of accessibility to potentially an underserved market or underserved group of people, I think that just ability to put money into investing is such a unique way to contribute to society too. So I'd be curious to understand from your perspective, how are you approaching an acquisition strategy? I know that the word acquisition might sound not intended to sound negative, but how are you getting people to get involved with your product and get people onboarded into Robinhood?
I think that the interesting thing that's happened this year is that clearly we gained a volume of new customers. What's even more interesting is the engagement levels are still very high and they keep coming back. And so from a marketing perspective, one of the things that I'm thinking about is the tools that we have on the site or in the app, and we have the snacks, newsletter and podcast. We have all the Learn articles. I think we've seen like a 250% uplift and people going to those to find out. How do we distribute those through media? And how do we distribute those through media that will actually reach this customer? It's not your traditional media buy. We need to go into communities. We need to bring people along the journey with us. And, we've always been very digital led in our advertising and our media spend. And that will continue, of course, because we're a mobile product. But it's more about how do we surround sound the customer with the information that they need through all the other tools that we have. That's how I'm thinking about it a lot. And that's into the people of color populations, Hispanic populations. These are new people, first-time investors on the app, and they really need to be helped along the journey. And we have a responsibility to do that.
Perhaps a tactical question, but for you, are you spending the majority of your dollars on branding or on performance type media?
Traditionally, we've been very led by performance. I think that's very normal in a company at our stage of development. I do think you'll probably see us begin to make some changes and adapt and sort of begin to wrap the brand narrative around the work that we put into the world so that people can understand a little bit more about what Robinhood is as a investment company, but also as the way that it has impact on society. That's part of the mission that we're going to take forward, I think, in the future.
Great. Okay, another question. So this one's for Josephine. So as banking behaviors are drastically changing and shifting, right? Similar question for you though. How has your media strategy changed, or has it changed in an effort to align with these new behaviors?
Other than being cut?
Besides being cut, exactly. Okay, being cut is a good point because you have less dollars to work with potentially. So how are you being even more focused? Let's spin it to the positive.
You can imagine being a brand person, tasked with brand building and reputation building. It's been a really, really tough 4 years. I think it starts to make us be a little bit more creative. So in some ways, how sometimes you go through life and you go through your career and you go, wow, if I only have a lot of money. And then when you have money, you suddenly realize, wow, I can't be as targeted as I would like to be. All the smart things that I used to do when I have a smaller budget. Now I have this big budget, but I don't have time or people to do it, properly. So in some ways, I think it's interesting to kind of like really regroup ourselves. It's been a really tough year where all the sponsorships that were on hold. There was nothing we could do out there. All the events were on hold, and all those you have to like completely revamp the way you think. So I think part of it is we started looking at things like DMP to see if we, instead of this like shotgun approach, do you start to become a bit more targeted, right? Do we start to target our customers outside of our own channels, as well as we also was starting to notice certain things, which I thought was fascinating. You would think like everybody's, we're like, well, do we still need to put it out of home? You're like, well, not really sure if anybody's driving. How about radio? And you start to go down all this, different levels. But one of the most fascinating things that I found out was on YouTube. And we tried to do a smaller takeover instead of like a whole takeover. We're doing, day parting because it's cheaper. And it turns out that for the last few years, where everybody was going mobile and we're making sure that our creative is on mobile and working in this tiny space, suddenly they flipped on us. Like TV became huge, like overnight. I mean, over the last few months, and suddenly we have to think about how we make creative on large TV again, even though they're on YouTube. So they're all in connected TV. So like I think to answer your question, we gotta be a bit more targeted and going that direction. And I think we're gonna have to learn along the way because COVID just hit us so hard. Everything you think about is normal is not normal.
Mm-hmm.
And then of course, because of the production issues that we have, we can't go and produce. I'm not allowed to travel at all, non-essential. Then suddenly I'm looking at influencers, right? Because they already have equipment. So okay, I'll stop talking again. I can go on forever as well.
No, it's interesting. Interesting. We appreciate it. I guess then, Tori, same question for you. How has your media strategy changed, or has it changed given the behavioral shifts of consumers?
Yeah, it definitely has. And our team has been hard at work on, similarly looking at, if people aren't driving, what's happening with out of home, right? These questions you never thought you'd have to think of. But I think for me, my focus is more on the creative side. And I think we've had to change that, to your point, Josephine, on, how do we think about creative that works in all of these different environments? How do we get equipment into the hands of people in their homes, right? We're talking about like literally mailing people an iPhone and a ring light. It's like suddenly everyone who had a ring light is now like the most expert producer. So I'm behind on that one, but I think, looking at how are we being flexible and creating strategies that can change with literally every minute of the day, something is changing and we're getting more information as we go. So I think they go hand in hand, right? The targeting for media and where are we showing up, but also how are we showing up and how are we doing that in a safe way, but still creating, marketing and content that people are excited to engage with.
Can you go into a little bit more about that, Tori? Because it is interesting. I mean, are you leveraging certain bits of data to know what type of, how are you marrying the user behavior with the creative? How do you know what type of creative to create? Go into more detail if you can.
Yeah, I think so. We have an incredible insights team that is, very consistently on the pulse of, what consumers are looking for. I think part of the strategy for us, in addition to being really data driven, is just making sure we're constantly reevaluating and taking the pulse of what consumers are looking for and what our communities are looking for. I think our Chief Brand Officer, Leanne Fremar, has been so wonderful at sort of encouraging us to say, is this still working? I don't care how far down the path we are. If this isn't the right thing now, something has changed, right? Something minor has changed in the world or major has changed in the world. If the data is different, or is this still the right decision for us? And can we pivot? And I think that's really hard to do, especially from a creative standpoint. This is our jobs. We're so excited to lean into this creative. And I know I've definitely been guilty of like, oh man, we're going to not do this now after so much time and energy and heart. But I think at the end of the day, it opens up the door for more creative opportunities and to kind of respond, to the data in that way. And I think what this has done, obviously from a Zoom standpoint, right? This is my living room, Christina, that's your car, right? But I think similar with consumers, like we were able to certainly not lower the bar creatively. The bar has to remain, where it always was. But I think for our US wealth management, we actually had our advisors film themselves in their home. And to me, there's something more humanizing than, I feel like typically financial advisors have been in like a different world and a different sort of echelon. It's like, this is my living room, this is my cat, So I think just using the time and the cultural moment to drive creative, I think has been super impactful. And it's changing every day for sure.
That's great. Yeah. Christina, I'll ask you the same question, because you'd mentioned the surround session of the user. I think that is such an interesting way to think about it. How do you ensure a consistent voice for Robinhood in all these different touch points?
I think we're still a startup. I think we've still got a little way to go on getting some of that completely locked and loaded, but we've actually been working a lot. Robinhood by default was quite a viral brand because, you referred a friend and you got a stock. And so there has always been that community around. You still get a stock, by the way, but the community around it has always been quite powerful. And actually, I think it's really interesting. Influencers for us have been key, and they've really taken Robinhood to their hearts and are explaining it to their communities really clearly. We've actually done some great creative shoots where we've had like one studio and shot 6 or 7 small little pieces that we've been able to run as pre-roll or on digital channels. And I think you'll see more of that from us, because to the point we've all made, this is very much humanized finance. This whole year has humanized finance in a different way. I'd like to think Robinhood was sort of leading the charge on that, but we will continue to make sure that we reflect the people that we serve and everything. That's
great. Okay, so we're going to do something a little different here. We have a poll question that we're going to poll the audience as it relates to. This is poll question number 1. Okay, I was going to go directly to poll question number 2, but we'll do both. We'll do both poll questions, and then we'll ask you these questions, and then we would like you to ask us questions. So please start to load up the Q&A with some questions, because after this, we'll answer some. All right, for everybody, I'm sure you can see it at this point, after the increased travel restrictions and the pause on sports and live events, people have shifted their money to necessities, investments, and savings. What would you choose to spend your money on? You see the options in front of you. I'll stall for a little bit while people make up their minds and decide. Maybe this can give us some really unique insights. I've submitted my answer. We have so many people attending this one, 150. This is going to be statistically relevant too. This is going to be great. Well, we can let the insights team decide that. Okay, should we see the results? Okay, savings, number 1. Stocks and investment, number 2. Not many real estate monopoly pioneers here, I guess. Nobody chooses to not save, and some splurgers. Pretty interesting. All right, sounds consistent with the data. Okay, we'll go right to poll question number 2. This one I find super interesting. This was a question that I actually wanted to ask everybody, because again, as people reevaluate their own finances, they start to decide really what they're spending their money on. And I saw an uptick in a lot of the subscriptions that I personally subscribe to. So I was curious to see if this was the case for everybody else. Did you spend money on any of the following? Right? Did you increase your spend on subscription services? And then which of these, select each of the ones that you did increase your spending on. Check mine. I mean, obviously everyone did Disney Plus so they could watch Hamilton, right? That happened. Okay, let's see what we got here. Disney Plus for Hamilton, as predicted. Music streaming, subscription box, and last, and meal kits. All right, very cool. Very, very interesting stuff. Thank you very much. All right, we got a few questions that are coming in. Please continue to put in there. One of the questions, yes, the recording will go out afterwards. Just to address that one quickly. Okay, here's the first question, and this one is for Josephine. How does Wells Fargo use data-driven consumer data to inform CSR initiatives, or does it?
Yes, we do. There's obviously some areas, that people that you want to target. And sorry, that seems too general. I have a specific group in mind, and I realized maybe I shouldn't I shouldn't actually say that, but there are definitely a lot of people who are already interested in this space. And as Tori had mentioned earlier, there are people who are seeking that, hey, if you're going to be my bank, I want to make sure that you're doing good, right, in some form or fashion. So one of the things that we do was with this other platform through our influencers actually, and also through sort of the AI technology, we're able to target the people who are actually actively looking for those. So they could be following influencers who are passionate about a specific topic, right? It could be very well from BNI to food insecurity to any of these like things people who care about the community or the people who care about their own community and own backyard, right? So we're definitely targeting that way, not specifically like just going through our DMP or anything like that, but it's more like, okay, let's take a look at, for brand building purposes and reputation purposes, what are some of the ways that we can target? So for example, last year, it sounds like crazy targeting. We won the American Music Awards, and we got so much positivity there, which we don't usually get, but we had like a 97% positive from all the engagement there, because the people who are watching those, they're interested in music, they are interested in what I'm trying to tell them that Wells Fargo is trying to do for the community. So it's weird targeting, but massive targeting in that sense.
Great. This is a question for each of you, I think, and I like it. So it will be interesting to see, this is how it's written, interesting to see how marketers can shift the notion of savings, so maybe just putting money away into a checking account or a savings account, into actually investments, right? As investments as a new way to save. So we can start with Christina. Maybe we can start. Have you thought about that? Have you thought about messaging and starting to change that perception? Is that part of your strategy, or would that be a new idea?
It's not a new idea. It's a very thoughtful idea. It's something that we're talking about a lot. Actually, our customers say that. They talk about the fact that they've joined Robinhood and they are planning for their futures. They do not see themselves as day traders. That whole sort of meme is really wrong about our customer base. And they talk about the things, when we do research, the things that investing will enable them to do in the future. So we will capture that and remind them of all the other things they can do once they start to invest.
Very cool. Similarly for Tori or Josephine, is it the same type? I see a head nod from Tori. Yes. Same.
I think it's one of my favorite sort of memes, and there are so many from this time. It's a great time for the internet, but one of them was like, don't touch your face and don't touch your 401k. And I'm like, okay, I like that, right? So I think it's just reminding people, I think, of the long term, and also just helping folks understand that it's based on your personal situation, your personal goal, and giving them, for us, it's kind of that ecosystem of products. That's like, what are you looking to do now? And how can we think long-term and what you need in the near term. I think, as you said earlier, Christina, people are kind of sitting at home like, wait, I have time to think about this. And so I think it's that overarching messaging that's really important. And I think one of the things we think about is finances. It's sort of been like, this is my life and this is my money. And what we really try to think about is my money and my life are one thing. It's how do I think about what I want and what's important to me and what matters to me, and saving and spending and investing. And so it really is so personal.
Another question that just came in, this one for Tori, for Josephine, I guess. You mentioned, again, just now you talked about personal, you talked about the consumer. How about the financial needs of small businesses or commercial businesses? Has there been a massive change? Has that changed the way you approach them, those segments at all?
Yeah, I can, it's such a hard time for small businesses. And I think the needs have shifted. We're doing a ton of work. So we have a group called Advancing Black Pathways internally. And one of the big focuses there is advancing Black entrepreneurs. And we've created a full campaign of content series, and they were originally supposed to be in person with a few really incredible Black community organizations, and obviously with this we had to go virtual, but it gave us the opportunity to reach more, and we're talking about things like pivoting your business during COVID and in response, but also how do we look ahead and think about capital, right? And we've seen such stark differences in access to capital and in cash reserves and how important that is, right? So I think it's not necessarily anything brand new that we're focused on. I think it's always been important, but the need is it is it is day to day. Like, is my business going to make it or not? And really understanding just the incredible hurdles that small business owners are up against, and how we can support them.
Okay, well, let's see. One more question just showed up. Josephine, this one's for you. Okay, this. If the financial industry is doing so well, why are budgets being cut?
Well, I don't know about Tori, but it may just be my company. I think we've been anticipating this for a long time for the company. So I think in full honesty, we kind of held back because of COVID. But budgets being cut also, I think we're getting into a world where we have to really prove ourselves over and over and over again, and like your results continue to being able to prove yourself and the work that you do almost seems like a constant now, at least from my perspective. It's not like, hey, I can say I want a 3-year plan and I want all this money. It's more like every year something change. And every year I see Tori nodding her head. Every year you kind of have to go like, you know what? Let me tell you why I'm doing this. And as media landscape changes, and between all these other ways of tracking success changes, it's very hard to go, okay, I'm going to build trust in 3 years, and then have people just go, okay, I remember you said that, I'm going to let you keep running. But you always have to constantly prove yourself, so it's never ending. And I think that's why. But I think it's actually okay, because then you start to prove yourself smaller again. You have a smaller budget, but then you can prove yourself, and then you kind of continue to build that. So at least that's the way I'm looking at it positively.
Fair enough. All right, this will be the last question, and this one is for Christina specifically. Why did you decide to do Robinhood snacks? This person is addicted, but would love to know the strategy behind it.
I think because, you know what, it adds joy to people's investing. It helps people understand. Jack and Nick are just awesome ambassadors for what investing can be. They're very editorially independent, though. I would like to point that out. And, the success of what they're doing to get people to listen to it is, incredible. I think they're one of the top most listened to podcasts or newsletters in the country at the moment. People care about investing. They actually do care.
So we understand. Fantastic. Well, thank you all so much for joining us today on the call, and thank you so much to the panelists for participating in this with me. I'm going to send it back to Alicia from the Ad Club as well.
That was unbelievable. The amount of insights that came out of this today are just extraordinary. So it's so valuable to our members. Many of you asked in the chat, we are going to share this afterwards. We do a wrap up, we do it in our newsletter, we do it on our website, because what you've had to share is important for more people to hear. So thank you for doing that. Of course, we want to make a list of the things that we need, like a water bottle, a puzzle, a puppy, a soda stream, and most importantly, scotch. So going shopping after this. We will continue to share information on other areas between now and the end of the year. We're going to do another vertical conversation on travel on December 15th. And we are going to talk about the out-of-home market that was brought up many times at our annual Out of Home Now event on December 17th. So a few more things coming up. Stay connected with us. Keep sharing. Everybody stay safe and healthy. Thanks to each of you, and Ogury. Everyone be well.